Bitcoin is moving again, and this time it's not random. Today's price action is being driven by two major forces: the latest US CPI inflation data and new signals coming from the Federal Reserve. In this video, we'll break down exactly how inflation and Fed policy are impacting Bitcoin right now, and what it could mean for the market going forward. Before we begin, this video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. CPI, or the Consumer Price Index, measures inflation, how fast prices are rising across the US economy. When CPI comes in higher than expected, it usually signals that inflation is still strong. This often leads investors to expect higher interest rates. On the other hand, lower CPI data suggests inflation is cooling, increasing the chances of rate cuts in the future. And that's where Bitcoin enters the picture. The Federal Reserve controls interest rates and liquidity in the financial system. When rates are high, money becomes more expensive to borrow, and investors tend to move away from risk assets, including Bitcoin. But when the Fed signals pauses or future rate cuts, liquidity increases, and risk assets often benefit. This is why every Fed statement, press conference, and economic projection matters so much to crypto markets. After the latest CPI report, markets reacted immediately. Bitcoin saw increased volatility as traders adjusted expectations around future Fed policy. If inflation continues to slow, the market may begin pricing in a more accommodative stance from the Fed, which historically has been positive for Bitcoin. However, uncertainty remains, and short-term price swings are completely normal during macro-driven events like this. Bitcoin is increasingly traded as a macro asset, similar to tech stocks or gold. Large institutional investors now respond to inflation data, interest rates, and dollar strength when allocating capital to Bitcoin. This explains why Bitcoin often moves before or immediately after major economic announcements. Understanding macro trends is becoming just as important as understanding blockchain technology. Looking ahead, investors are closely watching three key factors. First, upcoming CPI and inflation reports. Second, future Fed meetings and interest rate projections. And third, overall market liquidity conditions. These factors will likely continue to influence Bitcoin's direction in the near to medium term. In summary, Bitcoin's recent price movement is being shaped by inflation data and signals from the Federal Reserve. While short-term volatility is expected, macroeconomic trends remain a critical driver of the market. If you found this breakdown helpful, make sure to like the video, subscribe for more Bitcoin and macro market updates, and turn on notifications so you don't miss future analysis.